Welcome out to the Trading Justice podcast. And in this podcast today, we are talking breakout or bust. The market over the course of the last 4 months has went through a V-shaped recovery. We had a market correction in February and March, bottom action in April, May, and June were recovery months. We've recovered off that tariff-driven sell-off in earlier this year. We've recovered all of the price. And now there's an open question. Now that the market has achieved the break back up into those all-time highs, we're testing those all-time high breakout levels. Does the market have the ability to create a trend above the breakout channel? Does the market have the ability to break and run? So we're talking about breakout or bust here in the podcast. Going to talk a little bit about the type of growth narratives that can occur to help the market break out or bust. And so definitely hit that like and share and sit back as we have a compelling and awesome conversation regarding the market here today. And while you're at it, on Monday, we have our next edition of the Precision Trader webinar in our 2025 virtual conference season this summer. I'm going to be talking about swing trading. We talked day trading last week, covered calls the week before. This week, we're going to be talking swing trading. I love swing trading. It was my first love as a trader, still a love today. And I'm going to walk people through how to execute those short-term trades that we love to call swing trades. So come join me if you're interested in learning a little bit about swing trading in Precision Trader on Monday, June 30th, 7 p.m. Eastern Standard Time. Had a tremendous amount of fun. Taught a tremendous amount on day trading last week. Going to do the same thing on swing trading. And if you are ready to become an amazing member of the Tackle Trading team, go over there to tackletrain.com, hit the storefront, and we are running an awesome sale right now on all things pro membership related, including a substantial discount on those annual pro membership. And why would you want to do that, Mark? Because later on today, we're going to write the best newsletter in the market that our pro members get. We're going to write the best traders report. So if you want a complete understanding of the backdrop of the market on a week in, week out basis, if you want to get the best tradable setups every single week, come join the Tackle Trading Pros. That's what it's all about. Coach Mark, how you doing today, my friend?
Dude, I'm doing great. And seriously, that newsletter is fantastic. I enjoy writing my section. I enjoy reading the other coaches, and Matt's technical section is truly fantastic. And Matt, when it comes to technical analysis, right, and you're going to be teaching Precision Trader this coming Monday, and I seriously, learning technical analysis, learning how to trade is just a gift that keeps on giving. But when it comes to technical analysis, Matt, when you get in these key moments on a chart, right, where if you've been in a cave, in your trading cave, and haven't seen the headlines, every CNBC, Barron's, everyone talking all-time high, all-time high. We're 2/10 from all-time high. We're at all-time high, right? Those headlines become very, very prominent. But from a trading perspective, Matt, when you get to these key inflection points on a chart, it becomes a question of, all right, can you break out? And more importantly, can you sustain a breakout? That becomes a very profitable question. And we're going to analyze that a little bit today. Now, Matt, is it fair to say that heading into this point, you said, we're in this V-shaped rally, that a lot of the rally we've enjoyed over the last couple of months has been alleviation driven? Do you think that is a fair statement?
I think the sell-off was man-made. I thought the recovery was man-made. Yes, the tariff-driven headline sell-off that we experienced in June and March, and then basically over the course, which was about a 20% clip from the top, and basically over the course of the next 2 months, so we spent 2 months on the downside, 2 months on the top side, same energy, same team, basically. And on the top side, basically you had macro headline worry, macro headline alleviation is basically what you have had. And so my question, it's not shocking to me that the market has recovered the drop. That's what kind of changed this week, or that's kind of what the market achieved this week, was on June, and you can go back to the candle on February 21st, we clipped the 9 EMA. That was right at 6,200. We clipped that 9 EMA, and once we clipped that 9 EMA on that volatility day, that was kind of the kickstart to the tariff conversation, and it got underneath all those shorter duration moving averages. From that point all the way into April, there was that conversation and tackle that, listen, the 1 hour trend is the trend of choice here. The 1 hour trend, the 1 hour trend, the 1 hour trend. And that was kind of the conversation on the top side as well. But you basically saw that tariff driven sell off. And then you saw tariff driven alleviation. And then you saw macro sell off. And then you saw macro alleviation on the geopolitical side of the equation. All of this over the course of the last 3 months, from quarter to quarter. We ended earnings season in February. We're starting earnings season in July. From quarter to quarter, Mark, a lot of this has been self-made in terms of the volatility and self-corrected in terms of the volatility. And I think that's understandable when you talk about a recovery. I think that's understandable when you're saying, okay, can the market recover what it dropped, right? Well, the market can recover what it dropped just simply based on alleviation. But the ultimate and open question you have is, can the market run on top of that?
I mean, and that is the question on everyone's mind right now.
On top of that, the market achieved the all-time high. I said in multiple different settings this week and a little bit last week, but it was a lot this week, that once the market gapped down on Sunday's futures open last week on the macro headline of the Middle East, right? The Iranian-Israeli situation. We saw the market gap down on the futures open on Sunday. And from that moment on, you didn't see any continuation sell. Market gapped down into support, fought its way back up, and it's been on a rip ever since then. It's just been on a rip. And once it broke right here against 60-70, I was in a session. I was talking about day trading, and I was basically prepping a trade right then. And once you broke back up above 60-70, it was 60-80, 6100, 6170, 6200. There was a magnet at 6200. And once that got achieved, then it's just a matter of hitting into those all-time highs. I'm not surprised that happened this week, especially after the gap down and the gobble back up.
In fact, Matt, when I was talking to you earlier this week, right, and we were breaking down the, basically when there was the ceasefire, I remember you telling me, this thing's going to 6,200, and then it becomes what happens then, right?
Yeah, even on Wednesday, I was sitting in a session, and basically somebody asked me, like, well, what about that 6,200 call? And I'm like, it's a doji on a Wednesday. Give it a day. I think the market the first 2 days of the week had every reason in the world to take a little bit of a break. And that's basically what we saw. One doji this week. Everything else was back up to 6,200. But Mark, it wasn't back up based on all this positive news, right? It's not like we had positive news story after positive news story. To me, if once the technical side shifted early this week, there's just that magnet at 6,200. The market does this every now and then. It finds a level, it achieves the level, and then the ultimate question is, what's next? And I think that's where we firmly find ourselves going into next week. Is, yes, the market's achieved that all-time high, or back into the all-time highs. Yes, the market has recovered the correction drop. All of this is really positive. And now we're going into the next earnings season. And the ultimate question is, can we trend above? Because it's one thing to recover a drop that was basically manifested itself in the market. It's another thing to run on top of that, right? And so that's what I'm very interested in the market navigating next week. Obviously, this is going to be a very important technical conversation, but on the fundamental behavioral side, economic side, I find it equally compelling as right now as we head into earnings season.
Yeah, I mean, alleviation and the lack of evil can take you so far in markets, right? The price action to this point has made sense. And now it becomes a question of, all right, what drives it from here? And man, I want to throw out a few like traditional, traditional macro, traditional storylines that we've seen over the years that have been, the propelling force for many a market, right? First and foremost, the Fed, right? Is, Fed cutting, enough, right? Because there's been Jay Powell step back, but we've seen people like Bowman and Waller. Even some of the hawks in the camp, like Goolsby, basically say, hey, maybe we're closer to cutting than we've led on. But
They're close. They're closer to cutting than they're leading on, and I think they're far closer to the argument I've laid in the last couple weeks. And I do think over the next couple months they're going to get there. Quite frankly, I don't think a cut is as far down the road as a lot of other people do. Like I think you're starting to see little by little by little the certain Fed voting members start to shift a little bit. And so they're shifting in language more than anything, but I do see that a little bit. Now, the ultimate question mark, though, is can a cut create a trend? And I'm not sure it can.
yeah, I don't think
A cutting cycle can create a trend, but a cut itself is a trade. It's not a trend, if that makes sense. Like you'll if the Fed starts embracing a cut, you will see a good tradable situation, in my estimation. But is that a tradable situation that establishes higher levels of resistance and higher levels of support over time? No, I think you have to embrace more than just a cutting cycle. And even though I've been laying out that argument over the last couple of weeks that I do believe that the Fed should start embracing cuts, even my analysis, Mark, is just simply alleviating the restrictive territory. And I also think that's all they're looking at doing as well, alleviating the restrictive territory of the interest rate right now. I don't think that can create a trending environment. I think that could stabilize the market. I think that could create a little bit of up in the short term. But Mark, we would move on as market participants very quickly from a one cut conversation in the market. It wouldn't be a lasting conversation in the market. And if it's not a lasting conversation in the market, I doubt it would be a lasting trend in the market either.
Yeah, it feels like a bullet point at this point, right? Like, if Bull's making a case,
it's a sub headline.
Yeah, but not a driving force, especially at all-time highs, right? Fed cutting after 15% declines in the market.
That's a different
that's a different beast.
Yeah, it's a different beast.
And so, you have that, kind of maybe a bullet point. You also like the traditional things, and we saw this in 2017, where you had a driving market, and we've certainly at least seen stretches after that, where the major driving force was just good old-fashioned economic growth, right? Remember 2017?
Fiscal policy, though.
Global synchronized growth, fiscal policies, that's usually what drives that.
We can call it global synchronized growth simply because all governments kind of went off what the U.S. was doing, but the U.S. had their tax policy in 2017. That's when they got their tax policy plan passed, and that's when we basically saw the lower threshold on corporate taxes, the lower threshold on consumer taxes. Corporations got the bulk of that, and as corporations got the bulk of that, I think corporations got upwards of north of 80% of the entire benefit of the tax policy. And so obviously it had a very, very big economic impact, and it had a very big market impact. And that story of fiscal stimulus through tax policy led to a 30% upward movement in the market in 2017. And in 2017, you had that amazing market in 2017, just a very consistent trend, very like, you didn't even get flags. You got high bases, basically.
It was one of the best
up
trends.
High base, up high base, up high base. It was a beautiful trend. And the ultimate question is, there is commonality between the big, beautiful bill of 2025 and 2017.
And that's why I bring this up, because they are trying to replicate that environment, right? Deregulation, tax cut policy, right? And so can it, create that environment?
Can it? No, I don't. I don't think it can create the same environment of 17, because these aren't new tax cuts, Marks. These are the existing tax cuts that people are most likely already enjoying. Plus, on top of that, like no tax on tips, no tax on Social Security, no tax on overtime, stuff like that. So those no taxes on those lower levels, can that create some upward movement in price from a consumer spending perspective? It certainly. But in 2017, this was a new tax plan. It was impacting everything dramatically. And so the continuation of a tax plan that was created 8 years ago, I doubt would have the same type of upward movement in price that we had from the original one, right? And so, for example, Mark, you had Nvidia Breakout a couple of years ago on the AI trade, and basically you had this beautiful breakout based on the Blackwell chip, and that second wave in the AI trade. And that led to a just massive upward movement in price that achieved over a 6-month time period of like $2 trillion in market cap. Well, you're seeing a breakout on Nvidia now today. And the ultimate question is, can you repeat that exact same thing? Well, are you going to be able to repeat the exact same momentum of the past at $50 versus the exact same momentum on top of $150? That's a little bit of a different ask, not from a percentage gain perspective. So you look at the tax plan from 2017 to 2025, and it certainly could create some momentum. It certainly could create a tailwind for the market. But Mark, the market's going up this week without that. And it's not that they're not debating the big, beautiful bill there. They're debating the big, beautiful bill, but they're running into roadblock after roadblock, and it's becoming very difficult. In fact, even just today, they canceled the scheduled vote on the big, beautiful bill. And so can that quote unquote big, beautiful bill, and that's not my name, that's the official name of the actual act, can that bill, which includes the continuation of the tax policy from 27, including some of the other bells and whistles that we talked about, can that ultimately, if passed in the current iteration, create a growth narrative? My answer is no. I don't believe it can in totality create that similar environment to 2017. I think it can be a tailwind, but not to the same degree.
Yeah, and so these traditional things, they feel like bullet points right now, right? Like if I'm making, like if you and I were having a good old fashioned bullish bearish argument like we tend to do, and I say, Matt, you take the bear side, I'm going to take the bull side this week, right? I would say, these would be some of these kind of like, supporting points, supporting argument. They wouldn't be the main argument though, would they?
No, the fiscal policy can create a tailwind. Obviously, monetary policy can create a tailwind. You can't tell the story of the market over the last 15 years without one, monetary policy, and two, fiscal policy. Like that is the story of the market over the last 15 years. Monetary policy from 2008 to 2020, and fiscal policy from 2021 through 2024. Like that's the entire driver of the entire market story is the expansion of the M2 rate, and that is based on monetary and fiscal policy. And so as long as the M2 rate goes up, market goes up basically over that time period. And so, yeah, like there's obviously going to be similarities, but I find it dubious to suggest that you're going to get a rinse and repeat of the exact same environments based on the similarity of the same conversation. This isn't the same Fed that was in 2017 that had a zero interest rate policy. And this certainly isn't the same fiscal government that was pumping money after money after money into the market for 4 consecutive years. So no, I do think they're different environments. Obviously, I have respect for the conversation, and they can create tailwinds, but I don't think they're the primary driver of growth right now.
Yeah, and another one would be, in the classic argument would just be good old fashioned earnings, right? And I follow you like during earnings season. You are my earnings guru. I, come to you for report cards because of how good and how accurate you've been. You've talked me off many a bearish ledge over the years, right? Where I'm like, blah, 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 whatever my bearish, crankiness was at the time. And you've been like, listen, Mark, earnings are solid, right? And there's no signs. But earnings being solid or being B's or C's get degrees. Have you seen any like, where, are you on the like an earnings growth potential, right? Because if we saw earnings growth potential, that would obviously set us up. Is that in the
growth? It can always be a catalyst, and it can be a very important catalyst. And I do think it's going to be a very important earnings season coming up from that perspective. But from a growth narrative perspective, you don't know. What you know is you know what the environment is coming into it. And what you know from a growth perspective coming into earnings season is a month ago, we were expecting right around 9.4% growth, EPS growth for earnings coming out of this coming quarter. Right now, that's right around 5% growth. And so over the last month, you've actually saw downgrades of 4.4% on
Will you give me
EPS
those
growth
stats
potential.
again? Did I hear those right? Will you give me those stats again?
Yeah, 9.4% down to 5%, reduction of 4.4% in EPS growth over the last month. Now, once
Now,
again,
is that just cheating to set the low bar so they can beat
of
it?
course it is.
Like,
Of course it
I mean,
is.
because that's a
And that's
pretty.
why, like, I wouldn't take anything from that, because when you hear that stat, that is a negative stat, correct? It creates a
I mean, it's
negative yield,
startling
right?
actually. You know, it's
Okay.
just on its
So
face.
a month ago, we're expecting 9.4% growth. Today, we're expecting 5% growth. You would hear that number itself and be like, holy cow, what is happening out there? Where's all these downgrades coming from? Well, Mark, that's actually not happening. Okay. Because when you actually look at forward looking guidance, in my estimation, forward looking guidance is actually a positive for the market right now from an earnings perspective. This is a game that the market plays with expectations every single quarter, every single quarter. And the ultimate question is, are we creating a low bar environment for that the stocks in the market can easily step over on the actual release of the numbers, right? The earnings game is based on expectations. It's not based on anything real in the marketplace. And so typically speaking, we see about 3% down as we're coming into earnings season. So as we come into earnings season, the expectation game gets lowered. Banks, analysts start lowering expectations. Corporations start lowering expectations. And because we've had that tariff conversation over the last 3 months, companies, in my estimation, analysts, in my estimation, have used the environment as a way to lower that bar even more. And so you were expecting 9.4%. Now we're expecting 5%, which means the EPS bar is lowered. Now, mind you, wait for about a month and a half from now when I talk about, hey guys, we're getting 78, 79% of companies beating the EPS handle, and that's slightly better than the 5-year average. And that's the only thing the market cares about. They're not going to care about, whoa, but we were at 9.8% growth in March, and now we're at like 8 point. That's not how that game in earnings is played. And so to answer your question, yes, the bar gets lowered so that we can give a participation trophy to every Fortune 500 company in the market. Don't get me wrong, we'll rel on participation trophies for little Johnny in the Little League game, but for the Fortune 500 companies, they get them all the time, and it's called the analyst expectation game as they lower those bars so these companies can easily beat the expectation and make everybody a little bit happy.
Yeah, no, and so like what I'm hearing here, in this conversation, and this syncs with my own head, are not like bearish arguments. They're just bullish. They're just bullish bullet points, right? Because once again, when you're at these inflection points, right, when you've basically recovered,
Well,
all of the
you're going
alleviate,
into a breakout.
you're
What's the
going into a
question?
breakout,
Can you
and
break out? Can you break out on fiscal policy? Probably not. Can you break out on monetary policy? Probably not. Can you break out on earnings? Yes, you can, but it's got to be, we got a few weeks to go through that one. So that's a down the road question in my estimation.
and will you give me XLK on a monthly chart for those watching here? Like, I tend to skew bearish in the last 6 months as a general rule. And, when I saw the alleviation event, and talking to you, I was like, oh, well, I'm not going to be bearish at the start. But what really scared my bearish heart to the core was the breakout on XLK. Now, being here in the podcast, being at Tackle Trading, being a consumer of news, I've known that over the last couple months, the AI headlines have been fantastic. Now, they have gotten a back seat due to, well, we were talking trade war for
Can I ask
four
you
or
a
five
question
straight.
before we get into AI?
Yeah,
I just will not be able to move on until I get an answer to this.
yeah.
I know you've been trading bullish for the last 2 months.
Well, you have to.
I know you haven't. Well, hold on. I know you have not written a bear credit this week.
No, I have not one
Okay.
penny.
So why would you introduce yourself as a bear?
Because I have a long-term bear thesis that I very, very am strongly committed to. So
Isn't that just the perma-bear's way of saying I disagree with the reason price is going up, but I'm not going to do anything about it?
No, I don't actually disagree. I don't think the price action has been illogical up until this point. I don't think it's been illogical.
I met 10 people this week that introduced themselves as a perma-bear who trades bullish. Like I'm just so sick of it. I'm just so sick of it. Like,
well, because perma bears,
I don't think it has anything to do with your argument.
You know why you have those arguments?
You're a bull. Just say you're a bull. I am
not a bull. Absolutely,
you're trading bullish.
Well, like, yeah,
your portfolio's position.
You know
bullish.
Why you never
why are
run
you
into
saying you're a bear?
You never run into perma bulls that don't trade bullish for stretch, because if you don't, then they stop
I don't
trading.
meet perma bears that actually trade bearish
because they don't exist, because they're working in other professions.
No, it's just your way of describing how you disagree with the environment, but you don't understand.
No, that is not true.
Go up.
Absolutely, I have a long-term bearish thesis that I have a lot of conviction in. I
Me
do
too.
not
Me
think
too.
the price
it's called
action,
hyperinflation and the end of the dollar, which won't happen in my lifetime.
Price action has been illogical. I do not. I think the price action during this stretch has been. I
find perma bears to be fascinating. They're creatures that we need to study through humanity.
Listen, you pay me money. I'll go hang out.
I'm just listen.
Me under a lamp.
I think it would be a fan. I think we would be able to finally find the Loch Ness monster. If we can find a self-proclaimed,
I'm just getting the T-shirt. In fact, I'm going to get the beanie made that says, "I'm a perma bear. Deal with
the perma bear that actually trades a bearish position." I just want to find one of them. It's like a unique unicorn. If we can find a perma bear that trades bearish, Sorry. I'm sorry, guys.
Are you off your soapbox?
No.
All right. So where were we? All right.
Crazy.
So. Hi, I'm Mark.
I'm a perma bull, but I'm just going to buy put options, guys.
But one of the things that when I saw it this week, because knowing the AI narratives and how strong they have been really strong. And I think this is going to go into the logical argument of the price action perspective, is you broke out of a multi-month consolidation. Now in trading lingo, we call this multi-time frame breakouts, where you're breaking out on multiple time frames at the same time. But you've been trading sideways in semiconductors, in technology. XLK, very semiconductor heavy. XLK doesn't have your Google and your Facebook and your Tesla and your Amazon, but it has basically every other tech company in the universe.
Got Palantir and Microsoft. That's all it takes right now.
And when you see as a trader, right, forget the macro,
and Oracle and Broadcom
storylines, right? When you see a multi-month breakout, where something's been trading sideways for a long period of time, you're like, oh, that has some potential for some serious movement, and not just one day, 1 week, right? For a bigger, longer trend. And we've certainly seen the breakout continue this week, but it oftentimes starts a structural move up, right? A structural move up. And then when you understand what's behind this, Matt, well, we might not get a sustained breakout in the S&P from the Fed or fiscal policy or earnings, right? They might be contributing factors.
Earnings could be one. Earnings could be.
And their storylines.
Earnings could always be one. Yeah.
But one thing I think you can make an argument on, bull, bear, or whatever, or that you're just ignorant, is that AI and from a narrative, from a thematic, from a fundamental, from a sentiment, it checks so many boxes for me, can serve, as it has many times in the last few years, as the large force that carries everything forward, right? And I'd like to spend a couple minutes on some things that have occurred in the last couple months.
Well,
go ahead.
Before you go on, can I just say one thing about AI in general?
Well, you're my AI guy, so
and I'll talk about this from a kind of a phase perspective. So you had phase one of the initial AI trade, and that was kind of in 22 when it really kind of kick-started. The entire saga was kind of coming into late 22 coming into 23. And basically you had this AI narrative starting to occur, but it was really only a select few companies. And you had that phase one, and it was really just Nvidia, Taiwan Semiconductor, and really, really just semiconductors. But it was kind of those major companies on the AI side. And then in basically a year later, going in at the end of 23, going into 24, you had a breakout out of a neutral condition in Nvidia. And you had a pretty much a 9-month consolidation, 6, 7, 8, 9 months consolidation where you really didn't have anything going. Now, Mark, in the AI trade over the course of from 23 to 2030, which is kind of where all my analysis was led to, was 2030, was basically we're going to have these phase buildouts. And initially, you only saw it through the semiconductor and Nvidia, and then you started seeing it through the hyperscalers, and everything the hyperscalers was doing is what kind of the 24 market was all about. And that led to a beautiful 6-month trend where Nvidia went up like $1.5 trillion in market cap, Mark, just a run. And ever since then, we really haven't seen any other growth. For the last year or so, we've basically been meandering between 140, 150, and basically 80, 90 on Nvidia, wide range neutrality. We're breaking out here on Nvidia. Tech's breaking out, Nvidia's breaking out of a multiple time frame situation. And so I think it's extremely important to have an understanding of what's happening in the semiconductor side of the equation, what's happening in technology in general. And ultimately, the question going into this move on Nvidia is, are we going into that next phase build out? And it is my belief that that phase build out at this point does not start with Nvidia here today talking about this breakout and whether or not we can see a continuation. I'll go back to what I said about Taiwan Semiconductor during the very bottom of the tariff induced market sell-off. I said if it wasn't for the macro situation, Taiwan Semiconductor's earnings report would have kickstarted a new wave. I said that about 2 months ago, and over the last 2 months, what have we seen? Semiconductors and the AI trade carry the market back into those all-time highs. And so it is my belief that we're not starting that next wave. It's my belief that we're already entrenched in it, and this is an ongoing conversation.
Yeah, no, that Taiwan Semiconductor call at the height of the trade war was a fantastic one. And so it really, like, the Nvidia breakout is not just symbolic, right? And you saw the headlines this week. Nvidia largest, regains the largest market cap. It's the number one thing. And I got a list of 10 things for you, Matt, and I just want to have a conversation with them, because while we could debate the other macro things, I think there is like a really powerful, insane story that a lot of individuals might have missed over the last couple months on the AI trade and what could fuel. And I love what you said there about like continuing, right? We're not starting, right? The Nvidia breakout, which is my number one, because it is symbolic of, the technical momentum behind and the technical potential when you break out of a year-long consolidation, right? So that's gonna be running. But I love how you say we're not starting this. This isn't starting today. This isn't
it's an ongoing conversation.
This has been like, this next wave has been a couple months. But Matt, good old-fashioned technicals here, right? They are even more compelling than just this week's price action because of the amount of time that you've taken off heading into this, right? You've grown into a lot of the valuation worries that maybe you had a year ago, that a lot of people like, you've kind of grown into them with insane growth since then, haven't you?
I still have valuation worries. I will always have valuation worries, and every single person in this space will have valuation worries until the valuation is over, and that's not going to happen for a very long time. So I don't have much to say about the valuation concern.
What about the technical perspective here? Potential high?
On what perspective, though?
like for just a multi-time frame break. Like, I don't know if you put as enough emphasis on that I do. I break out of a 9-10 month consolidation pattern. That's not just a breakout. That is a massive, massive, massive move, and it's one of the things that.
Well, yeah, I put it number one on the list. Yeah, I think it's important. Yes, I don't know what else you want me to say to it though.
Okay,
Like,
fair
yes,
enough.
I think the Nvidia breakout is very important. No, I wouldn't chase the Nvidia or the semiconductor breakout. I would wait on a secondary pattern.
Yeah,
If I
I
was
don't
not
really want to
already
have like
involved.
secondary
Yeah.
pattern trading conversation. I want people to understand how big this
Well,
narrative and how broad it's
okay.
been.
So
Right?
so just to make sure everybody's on the same page, because if you ask me to give it an update on my list, it's going to be one of those things that we're going to go back and forth a little bit. This is a list of the top 10 reasons why we feel the AI trade has the ability to carry the marketplace. Because when you look for growth, and again, me and Mark have had this debate in the podcast, we've had this debate in tackle trading. When you talk about the market and alleviation events have the ability to alleviate what the issue was caused. They typically don't have the ability to run on top of that. That's why we're having the conversation. Where's that growth going to come from? Is it going to come from the fiscal side? Is it going to come from the monetary side? Is it going to come from the earnings side? Well, fiscal and monetary are kind of out to lunch right now. Earnings is kind of batter up, but they're kind of next on deck. And so as we're navigating the next couple of weeks, ultimately the question is, where does that growth come from if we do have a trend? And in my estimation, that growth comes from the AI side of the equation. And so the first one on the list was Nvidia's breakout, because Nvidia is king, queen, and country of the AI space. And when Nvidia breaks out, we typically see further appreciation here. And so, yeah, Nvidia's breakout's legit here. It's a multiple time frame breakout. It's going to close on the weekly chart, obviously, most likely here today. And I do believe any secondary pattern will play very well on Nvidia.
Yeah, no, and number two on the list is Broadcom. Now, one of the things that you need for a market move, right? Because there was a lot of like, in the first move up, cynics would say, well, this is just a Nvidia story, right? This is just a Nvidia story. You heard that, right?
No,
Like,
wait. In the first run up, it was just an Nvidia
you
story. It
know,
was a
but
very select few companies, and then it brought it out in phase two, and it's broadening out even more as we go into phase three.
so and this is like from the AI perspective, we're in phase three, and you say like you said a few minutes ago, we're a couple
Yeah,
months into
I
this.
think we're firmly entrenched in the monetization of software and enterprise software, and I think we're firmly in the race to AGI. And so, yeah, I think we're at a different stage of the AI conversation altogether. Yes, 100%.
Yeah, no, and we're seeing that broadening out where it is, hardly just a Nvidia story any longer. Seeing that in product, and there's going to be several companies on this list to kind of show how innovation point. I was talking to you last night and this morning, Matt, and the thing that I kept coming back to was, man, things are happening so fast, aren't they? Right? In the product development, in the implementation, in the
If you're,
expansion,
as a company, if you're not already embracing AI solutions, you are behind. Yes.
and Broadcom delivering some of those AI solutions, right? They've seen just massive year over year increases, and in a coming bullet point, we're going to talk about this, about the earnings and earnings growth. But just like in Broadcom specifically, like in their AI related ASIC revenue, right, 77% year over year, right? We've seen, when you see price target raises, HSBC raising their price target to $400, right? We see all of these like really silly, like, oh, I'm raising it $1, I'm lowering it, like, basically saying HSBC is like, man, I agree with you. We
Well,
are
it's not
in
me.
phase three.
It's not them agreeing with me. It's me agreeing with them. They're the ones that upgraded AVGO here. Broadcom is quickly becoming one of those top tier AI names. And I think there's on my AI Gold Rush watch list, which I'm going to update next Monday. or not this coming Monday, but a week from Monday. So this coming Monday, I'm in Precision Trader talking swing trading, and then we're going to end the summer season with the live AMA, and I'm going to unveil the latest AI Gold Rush watch list in that AMA as well. A couple companies that really kind of took I would say, didn't just knock on the door, but busted down the AI door this quarter. Just to give you a couple off the top, Mark, there, Broadcom certainly is one of those companies that is doing amazing. And what they did is they basically, on their earnings this quarter, they just had an absolutely amazing earnings season. They basically pulled off a hat trick. HSBC did a price upgrade from 240 up to all the way to 400. I can't disagree with it. It was a massive price upgrade. And so I agree with HSBC on the Broadcom analysis. I also think down the list a little bit, you'll find Oracle there as well. Oracle had an earnings report that was a hat trick this quarter. And Mark, you didn't have a lot of hat tricks this quarter, but guess what you did? You had one out of Taiwan Semiconductor, you had one out of Oracle, you had one out of Nvidia, you had one out of Broadcom. All of those are AI relatable names. Beats on EPS, beats on revenue, beats on forward-looking guidance. Palantir, Mark, they not only got an upgrades and their earnings, their government contracts are now in the billions on AI development. And so when you're talking about Broadcom or any of these companies here, yeah, they're the ones doing a lot of the heavy lifting. And over the last month or so, companies that were not tier one AI companies are now in competition to be tier one AI companies.
And this is for me, because I am not an AI expert. And, once again, there are a couple things that I rely heavily on you for. But when I, am analyzing, the potential for a broader move, which is what we're discussing, and I see, not just Nvidia, but like multiple companies and their products and the innovation that they're doing behind them, expanding at just mind-blowing paces, right? I see not a
Oracle went from not really part of that, not a massive part of the conversation.
I have them on the list. Let's talk about them now. Number 3, Oracle, right?
Right. Well, quicken that pace there. Let's go.
This is an exciting conversation, right? But we're seeing this, and give me Oracle, and it's just not in the chips, right? It's in other products and services surrounding AI. And so all of a sudden, when I see a company like Oracle expand their products, see the profit, see the revenue increasing in non-chip, because I've always gotten the
enterprise
chip
software,
argument, right? I've always gotten the chip. The chip argument for me has always been simple. Oh, people are going to invest, in building out the AI. They're going to need a lot of chips to do that. But that we're seeing, an expansion of AI beyond
from
just
a services and a software perspective.
And that is
you take Oracle, for example, who's basically putting their AI software in everything out there, like attaching to everything. And so, yeah, it's that's what happens though. When you go from phase 1 to phase 2 to phase 3, you start to expand. It starts to impact outside of just the pure semiconductor. AI is not a pure semiconductor conversation any longer. It's a very important part of it, obviously, but it's not the end all be all of everything in the AI trade any longer.
And so if you're
specifically, before we move on that one, in semiconductors, Mark, even in semiconductors, it wasn't exactly a semiconductor conversation. It was a GPU conversation that basically Nvidia had the cornerstone of. That's changed. It was at first there were 3 companies. You had Taiwan Semiconductor, ASML, and Nvidia. Mark, now you have 150 companies that you talk about in the AI space. It has broadened radically, and just in the last 3 months, it's expanding at a rate that we haven't seen in the first couple of years of the AI build out. The first couple of years of the AI build out, looking at it historically, is pretty fast, but looking at what these companies are doing today, it's mind-boggling. It's absolutely mind-boggling, the speed of the advancements here.
Yeah, absolutely. Number 4 on the list is Meta. Meta has made a lot of headlines, but they are certainly they're willing to put in the money here, right? And for me, and once again, you can add whatever color here, but for me,
what's Meta doing? Like,
well, they're spending a lot of money. Like,
I know.
the
What's
$15
number four though?
bill AGI bet, but like you could also put the hundreds of millions that they're throwing out there to attract AI talent, the poaching of CEOs of other companies, right? They're investing, they're pushing the chips in the middle of the table here.
On Meta, yeah, I think this is a big one, honestly, that gives me a lot of confidence in where growth can come from. And I think it's misunderstood. It's much bigger than what you just laid it out there. It's not just what Meta is doing, it's what Meta is doing and how other companies are going to respond to what Meta is doing. See, when you want to talk about growth, growth comes from capex spending. Growth comes from increase in spend, increase in R&D. Growth comes from increasing the M2 rate. Growth comes from increasing the monetary supply. And so when you talk about growth narratives, you got to be talking about where that spend's going to come from to create that growth narrative. And Mark, there's not a lot that gets people more aggressive on the competition side than the race to AGI, to who's going to win that race to AGI. And AGI is artificial general intelligence. And so when you're talking about Meta saying, you know what, we're going to spend $15 billion in an environment where the capex spend is $280 billion. Well, capex is what these companies are spending on GPUs and software and everything to build out the infrastructure of AI. When you're talking about that race specifically to AGI, it is the R&D budget that is going to the race to AGI. So you got capex, you got R&D, there's difference. And so the ultimate question, what Meta did and what Zuckerberg did recently is say, we're going to win that race to AGI. Well, Mark, what does that tell people at Google? What does that tell people at Anthropic? What does that tell people at OpenAI? What does that tell people at the China LMs? Well, they're going to do what? What are they going to do?
They're going to spend a
ridiculous
amount of money
because the winner to AGI has a massive leg up on the competition. Would you agree with that?
Yeah,
that includes
absolutely.
defense companies, that includes robotic companies, that includes automation companies, that includes your semiconductor companies, that includes your hyperscalers. So the race to AGI is and Meta firmly entrenched themselves in there with their $15 billion bid on the race to AGI. But it's what it represents outside of that, because Meta spending $15 billion is not a big deal. I want to be very clear on that. Meta was burning $10 billion on Reality Labs just 3 years ago, and everybody hated it. They're spending $70 billion on capex this year. $15 billion is specifically to the race to AGI, which creates a competition environment for other companies to compete in. That leads to growth narratives, in my opinion.
Yeah, I mean, I'm going to ask you a simple question. Is just the race to AGI, just the ridiculous amount of money that will be spent, enough to propel and create the growth to sustain a breakout here? Just that.
In tech, not in the market.
Not in the market, but in tech, but not in the market, right? Because there's no carry through on the market. You need other things.
Yeah, yes.
Okay. We just wanted to ask that. Number 5 on my list, Palantir, you mentioned them. One of the things fueling revenue growth will be governments. So Palantir is picking up more, and you're going to see the U.S. government, you're going to see other governments just spending a ridiculous amount of money on this same arms race, right? Palantir, I think, very symbolic of, picking up additional revenue and not small chunks from the U.S. government. Right. I think Palantir, is symbolic of just the whole government spend as a whole, is why I made the list.
Well, Palantir gets their money from the government, there's no doubt, but it's the expansion of that is interesting. They had government contracts that were totaling in the hundreds of billions. Now they go up to 1.3 billion, and that's just an expansion. It's part of the AI growth narrative, no doubt about that.
Micron, they're sold out. If you want to know about demand, number 6 on the list, Micron. I think their chips are sold out to like 2026. Like you can't buy them. I mean, that's how much demand and how crazy it is. Any thoughts on that?
If you have a demand that goes out to 26, what does that typically do to the stock?
Right, they had earnings this week, digesting the move after that.
Yeah.
But on the earnings front, number 7, earnings as a whole, right? This is one of the things that we commented on this time and time again in our pro community.
Well, and again, I just want to come back to this, Mark, because I think we're getting lost in the weeds a little bit here. The ultimate question is Can the AI trade, because I don't think you see a lot of growth coming out of the just economy in the next 6 months, correct, Perma Bear?
Correct.
Okay. And I don't think we see the central bank aggressively embracing cutting cycles or quantitative easing, correct?
No.
And
Correct.
you don't think President Trump's going to start raining helicopter checks circa 2020, correct?
Well, less convinced on that than the
Okay.
others, but yes.
Okay. So again, like, where's growth going to come from? The ultimate question is can AI trade and semiconductors and the growth narrative coming out of technology in general, can that propel a market to break out of the all-time highs? And over the course of the last couple of weeks, you've had major updates coming out of Nvidia that propelled it to break out. That's number one. You had major price upgrades out on Broadcom. You had a major hat trick pulled out on Oracle. You had basically Meta put in $15 billion in AI spend for the race to AGI. You basically had Palantir get more and more and more government contracts. Micron has so much demand that they can't meet it all the way out to 2026. And now you're in earnings season and an earnings conversation where you look at earnings growth, Mark, and there's not an industry that has better earnings growth than semiconductors out there right now.
Yeah, no, and that was one of the things. Tech earnings this last quarter stood out, right? There were a lot of people withholding guidance and uncertainty. Tech was just delivering. They were just delivering on earnings all over the place. It was pretty. Do you expect to see something similar this coming earnings season?
I don't know how to answer that, honestly. I expect expectations to be low bar expectations. I expect companies to easily beat those expectations. Yes, that is.
I'll be shocked if tech doesn't have a great earnings season, right? I think this is a bet on the trend. You saw it really, really good in the first quarter.
Listen, you can't. That's like people coming out before the military has the ability to actually assess the damage that happened with those strikes and saying, I know what's going to happen. I do not know where the price is going to be before Nvidia reports earnings. And if the price is front run going into that, you could see gap down situations. So
the actual
that's a
trading
response is different. It's more than a trading conversation.
Well, no, because it's like Micron, because Micron had fantastic earnings that kind of slid a little bit, given back. That's the price response, but the narrative is still there.
There's a positive narrative on semiconductors and the AI trade going into earnings season. How they will respond in earnings season is going to be a conversation for earnings season.
And then number 8 on our list is sovereign nations building AI mega structures. Matt, it's the government spend. We saw this with Trump's trip to Saudi Arabia, right? Lots of chip deals announced. For me, when the government wants something, right, and every government in the world, right, wants to be at the forefront or to keep up with AI technology, that tends to translate into revenues and results, right? For individual companies.
10 or not, these are real deals that are happening here. You got 10 billion pledged in AI infrastructure build out in the Middle East. You got $20 billion pledged in AI build out in Europe. That's on top of the hundreds of billions of dollars in capex spending we're doing here in the United States. Those numbers are going to expand next year, the year after that, and the year after that. This thing is just starting.
Now, remember, number 9 on the list. Remember when capex was a bearish narrative back in February, Matt?
I remember when people were using capex as a reason to say AI trade was dead. Yes.
Yeah, I mean, it was like it was just. I mean, and they weren't just saying it; they were screaming it, Matt.
Yeah,
they were screaming it. It was all over headlines, financial media. Capex going down, big. Well, capex spending, hyperscaler spending has been pretty insane. That's it. That narrative is completely dead, isn't it?
I haven't heard a soul talk about the capex concern in about 6 months. I would say there's been other conversations. Believe me, if a trend does persist here, we get a growth trend here, they'll start concerning themselves with capex spend again. But it's not going to be a conversation for right now. No, capex is certainly on the positive side of the equation.
Number 10 on the list, giving Elon a shout out. You had listed out robotaxis could be the biggest commercial AI application ever. You're not
Mhm.
one to pry hyperbole. Biggest
Um,
application, commercial application ever.
yeah, robotaxis absolutely, and robotics in general can be the biggest AI enterprise software application in the history of mankind. Yes.
I mean, I go back to something I say a few minutes ago, where it's like things are happening so fast, right? And the news flow over the last couple months, which has really kind of taken second fiddle
Mhm.
to wars and trade wars and all that, has been insane, right? Just on a excitement of the imagination, like fuel the possibilities, and then realizing the amount of revenue and practical, just results potentially for companies. Come back to the original question, Matt. Can What can propel a breakout? We're here at the resistance level. We're here, like, and this is the point where traders ask the question, right? I know from a perma bear, perspective.
You're not a perma bear if you trade bullish positions.
Anyways,
Sorry. I'm done with it. I'm done with the perma bears trading bullish positions and saying they're perma bears and being able to eat their cake and eat it too. Not
you
going to
know,
happen.
so anyways, uh, this type of narrative and the fundamentals behind it is very much a once in a generation type narrative for me. And
Mhm.
we saw in 2023, and I don't know if you'll disagree or agree with this, but the practical benefits to other companies, industrial companies, financial companies, right? That they'll see, that's more of a long term argument. But we've seen liftoff that even if their earnings results aren't fantastic, right? We've seen in stretches in 2023, right? The strength of AI lifts all boats along the way type, situation.
Well, I don't think this is too dissimilar to a conversation people have over time in the market. If you were to have this conversation at any point in history about where growth is going to come from to propel a market to break out of an all-time high and create a trend on top of that, I'm willing to bet more than 80% of the time that growth would come from some degree of technology related analysis, correct?
Yes, yes.
Okay. And it's just so right now that over the last couple months, from Taiwan Semiconductor's earnings until just this week with Micron's earnings, right? Has there been a negative earnings conversation out of the AI trade and major, I would say. I would say
No,
no.
no.
From Taiwan to Nvidia to Broadcom to Oracle to Palantir to Micron this week. All of it was on the positive side of the equation, right? Correct?
Yeah, oh,
And so
absolutely. Reaffirming of the
to
narrative.
me, I'm going into into the market and I'm looking at this all-time high breakout and I have the same questions everybody else does. Does the market have the ability to break out of this all-time high and create an amazing trend above the all-time high? Well, it's not going to come from the fiscal side and it's not coming from the monetary side. Geopolitical alleviation, both from the trade war and real war that has been occurring, has been enough to propel the market to recover the drop that occurred on the same causation. The drop was occurred on the causation of trade war headlines. The recovery was alleviation of trade war headlines and real war application headlines. And so it makes sense for me to see the market go down on that and recover on that. Now that the market has recovered, I do think the market entertains a different conversation at this point. I think it's one thing to talk about alleviation. It's one thing to talk about the market recovering what it dropped. I think it's a completely different conversation to go into the next leg of this market saying, can the market break out and run? And to me, when I look at where growth can come from, I look at the fiscal side, the monetary side, the geopolitical side, the behavioral side, the economic side, and I struggle with trying to find an answer to the question of where growth can come from with that. I do. I believe the economy is going to show a slight slowdown over the course of the next 6 to 9 months. That's part of the rationale that I believe the Fed should alleviate the restrictive territory of monetary policy right now. But that's not a growth narrative. To me, when I look at AI, and after Taiwan Semiconductor, and like we just talked about with all these other companies, but with Nvidia breaking out, Broadcom's price upgrade, Meta's pledge on AGI, Micron's demand threshold all the way out to 26, Oracle becoming an AI cloud backbone of the entire world out there, semiconductors across the board having the most positive earnings expectations from a growth perspective at 33% EPS growth. Once again, market's expecting 5% growth. What's expecting 33% growth? That's semiconductors right now. Technology's second, actually, at 17% growth. When I look at the sovereign nation argument of saying, okay, where growth can come from, well, if it's not going to be on the fiscal end and the monetary side, well, you got sovereign nations out of the Middle East, you got sovereign nations out of Europe, you got sovereign nations out of China, out of Asia right now, all wanting U.S. assets
No, and
to
I think that's
build
a critical
out their
point.
infrastructure. Yeah. And so it might not be coming from the U.S. right now, but it doesn't mean it's not coming from other fiscal governments out there, because everybody wants some of the AI trade. Capex spending has been a positive. Robotaxis went live this week. And we'll have to wait and see on the success of that in the short term. But in the long term, yeah, I do believe automation and robotics is probably one of the biggest technological impacts we've ever seen in human history. Yes, absolutely, 100%. And so, yeah, I in my own kind of weird way, I navigate the financial markets in terms of this breakout. I'm going to look at it from a technical perspective. We're 5 bars into the breakout. I'd love to see a high base plays, high base breakout would be so sexy right here. So beautiful right here. Technically, that's one thing. Fundamentally, I think you have to be able to take advantage of expectation in the market. You have to take on risk in the market. To take on risk in the market, you have to have some underlying belief in the move. And right now, when you're talking about being able to break out a run, I don't have belief in the fiscal side right now outside of the sovereign government argument. I don't have belief in the monetary side right now. I don't have belief in the economic growth side because of the monetary and the fiscal side. If monetary and fiscal side gets cleared up, economic side gets cleared up really fast. And so when I look at the totality of the market out there right now, where can growth come from? Well, I think it's the same answer of where growth can come from in most scenarios, and I think tech has a very compelling argument right now.
Yeah, and it also, it also in this conversation, it has me far more interested in a broad comment, and this is simplistic, but it's true, and sometimes we overcomplicate things as trader. Give me a Broadcom over your random industrial finance small cap type company, right?
Well, I have zero. I don't have a lot of,
because even hearing you, your concerns on broadening, you don't really have a lot of concerns on the growth in tech space, right? It's just, how does that translate to the broad market where, that's where you're more curious to see how that plays out. Would that be a correct summary?
I think there's a lot of growth expectation in tech. I think there's a lot of growth expectation in communications. I don't see a lot of growth in cyclical and defensive right now. No.
Yeah, that makes sense. All right. Let's wrap up. I got a couple
stabilization, but not growth.
I thought those Broadcom and Oracle charts just technically fantastic. Technically, there's a lot to
both reports were game-changing reports.
And be sure to check out our scouting reports. We put them the best picks we have every week in that scouting report. Pro members, be sure to check that out this weekend. And if you're not a pro member, good time to become one. Matt, I got a couple questions for Coach's Corner to
rapid fire style.
Rapid fire. Question number one: what's your favorite pattern, Matt? This was asked in but what's your favorite pattern out of all, if you only could pick one?
A multiple time frame breakout,
which is just in technology. Multi-time frame breakout. Number two: do you ever front run?
Of course, I front run. Every trader does. But I think it's the patterns that go into a multiple time frame breakout that you front run. For example, you get a pullback going into like the cup of a cup and handle. I think you can front run. The increase in support against the backdrop of an ascending triangle. I think you can front run. A intraday flag going into a multiple time frame intraday breakout. I think you can front run. So it's really about kind of the momentum patterns that develop in front of a breakout that I think you can front run.
All right. And then I'm going to ask the final question on that, Matt. Are you going to be discussing some of these type of things in Precision Trader on Monday?
Yes. Yes, I will. Yes, I will. I'll be talking a lot about entering into breakouts, retracements, overextension as I teach the amazing Precision Trader this week on Monday at 7 p.m. Eastern Standard Time. Come join me as we really kind of learn about swing trading, I would say. And we're going to basically be working in the market in Precision Trader. And so I'm certainly going to go through some slides and, do some teaching and all that jazz, but we're going to get into the market and we're going to do some application concepts as well this Monday. And so if you're looking for a trade, I promise you, we're going to find a couple on the Monday Precision Trader webinar. But yeah, definitely hit the link in the description, sign up for Precision Trader, and let's have some fun on Monday.
Yeah, I've loved this conversation, Matt. For me, not all charts are created equal. Like when I have a chart with an amazing narrative that I understand, and talking to you and picking your brain about the things actually fueling this, right? But all charts are not created equal. If I get a breakout with a strong narrative that I understand from a fundamental perspective, it opens up to not just a trade, but maybe a position, maybe an investment type mentality. And so I've really appreciated this. But brother, another one in the books. My AI guy, you are so good at this stuff. I have so much knowledge. I appreciate it. Yeah, everyone. Do you have any final thoughts, Matt?
Nope.
All right. Have a fantastic week, everyone. Catch you next week.
Later, team.